Oh, guys, SoFi just keeps dumping and dumping. I mean, we have stocks going up all over the place, all-time highs everywhere, but yet SoFi has been trending down instead. So that begs the question, was I wrong about SoFi stock? So let's talk about it and get you guys the truth on all that. Just make sure you like the video if you like getting the truth without the hype. And that's actually how you tell all the creators that you like their videos, by just hitting that like button there, subscribing to the channel, and that lets those creators know that you really enjoy their content. Now, yes, SoFi has been incredibly frustrating this year. I agree completely. But as an investor of over 25 years, this is nothing new at all. It's just not. And more importantly, it's actually the setup I want as a long-term buy and hold investor. Now, if you're trading, that's a whole different story. But I'm assuming if you're here at this channel, you are interested in long-term buy and hold investing, and this is the type setup you want. Now, there are no guarantees in this game at all. There's not a guarantee out there. But this is how you underperform in the short term, but you absolutely crush the markets over the long term, is by dealing with, and more importantly, taking advantage of scenarios like this that we are in right now. And here, I'll give you some recent examples of this. Just go back to 2022. Look at that. Look at Meta versus a stock like McDonald's. I heard the same exact thing over and over and again in my group and the comment section of my videos, where people were saying, why are you buying Meta? That's stupid. It's a dead company. Look at McDonald's. It's roaring. Look at some other kind of old man style stocks like that. They're just roaring. They're up 20%, 30%, 40%, while Meta's down 40% during that same time frame. What are you doing, Luke? That's dumb. Well, if you look at the charts, yeah, after that period of time, sure, you got maybe a 40% return at McDonald's if you would have been in it during that whole time. But because I was in Meta instead, I'm sitting on essentially a 5x from that money. So to me, one went out a lot better than the other. And if you manage to trade out of your Meta position, then put it into McDonald's or another stock like that at or near some of those highs, you're basically sitting flat over that time frame. So essentially now you're sitting on a 0% return or a very small return, and you missed out on a potential 5x there with Meta. And again, the narrative was exactly the same. Now, I'm not saying SoFi is as good as Meta was or as easy an opportunity as Meta was, but the narrative and the feeling behind it was exactly the same. It was a dead company that is dying and never coming back. But here, let's do one that might get a few of you guys really fired up here. Let's look at Palantir in 2023 versus Tesla in 2023. And when you look right there, Palantir started off nice, and Tesla, of course, had that bottom right there in January and really took off like a rocket ship. But then Palantir came back down to $7, and the same exact narrative again started popping up that, oh man, I should have put my money into Tesla instead of Palantir. Why did I buy Palantir instead? What was I thinking during that time? Because of course, at that stage, Tesla had rocketed up to $260, $270 or so. But again, looking at that particular situation, since then, Palantir has basically almost 4x'd, and Tesla is sitting flat or a little bit down depending upon when you bought during that time frame. And that's with a growth stock like Tesla. The same exact things were being said during that time frame as they are right now about SoFi, with all the other things popping off. I'm not saying that SoFi is the same as Palantir or is the same as Meta. I'm talking about the narrative, and everything else around it is identical. So how do you know if this is a great example like Palantir was, despite the fact that it'd be really hard to buy Palantir over Tesla whenever Tesla's on a massive run and Palantir is heading the other direction? Understand that completely. But how do you know if this is kind of a Palantir example, or if there's something else out there that maybe makes it, dead money and it's going nowhere and makes it a dead stock essentially? Because you're right, being on a significant discount is not a reason to buy a stock in and of itself. Just like a stock being up a whole notch is not necessarily an indication on if the stock is doing well or not. But you're right, there are lots of stocks that are on a great discount, that they're on discount for a reason, because the company underneath is not performing. So that right there is what you have to determine, is not what stock price is doing. That just tells me whether or not I'm getting a discount or not, or a potential discount or not. I need to understand, how is the company underneath performing? Not in regards to stock price, because remember, Lucid could be up over $100 right now. Well, that stock price is performing incredibly, but that company is not worth anywhere near, not worth 1/10 of $100 per share. So that right there is an example where just stock price may be up there, but that is not indicative of what's happening with the company. So we have to figure that piece out. What is going on with the company itself to determine, is this more of a Palantir style opportunity or something like that of that nature, or is it really a dead stock? So I'll give you my 4 reasons why I'm bullish on SoFi, And I'll let you know, am I buying more or not, what price, and all that other good stuff like that. So number one is earnings performance. We are now at 10 plus quarters of double beats and raises for SoFi. An incredible performance quarter after quarter after quarter after quarter, consistently guiding to profitability and then hitting the mark right on the nose. Just quarter after quarter of excellent execution and hitting your marks. And I'm sorry, I'm not trying to upset anybody here, but Tesla hasn't done that over the past 2 years. They have not had beat after beat after beat, raising guidance, beat again, rinse and repeat. They have not had that during this 2-year span. Now, that doesn't mean I'm not bullish on Tesla or anything else like that. Just earnings has been rough. And remember, Elon told us they were going to be rough, so that's okay. For several quarters now, earnings have been tough for Tesla. So we got to understand they have not performed as well on earnings as SoFi has overall in regards to that. They just haven't been giving us double beats and raises. And honestly, most companies haven't been doing that. Now, NVIDIA, been absolutely crushing it. They've had better earnings. Meta has had better earnings. I agree there completely. But I can also look on the other end, and those stocks have been booming. But I can look on the other end of the spectrum and go, Apple hasn't been crushing earnings at all, really. They've actually been kind of disappointing, but yet it's up big for the year. And again, SoFi has gone basically the exact opposite direction, despite the fact SoFi's earnings have been better in terms of performance than Apple's have been. Remember, stock price always catches up to earnings, both to the upside and the downside, meaning that, hey, if your company continues to perform underneath, but the stock price continues to come down, at some point in time, that stock price will come up and it will meet earnings, and vice versa, like we talked about with the Lucid example. Man, you can have stock price going to the moon, but if there's nothing underneath holding it and supporting it, it will eventually correct back down to where the earnings are. And so that dynamic holds true today. So when you're thinking about earnings, you have to understand that just because you're not getting the stock price you want, if that company is performing underneath in regards to the earnings, hitting their guidance, exceeding their guidance, then raising their guidance, at some point in time, the stock price is going to catch up to that. And if you want to work directly on earnings in regards to a stock, next up we have Tesla that we're going to do live in person with me. I extended one of the biggest discounts ever for my group through the weekend here. So make sure you take advantage if you want to be on there live with me going through Tesla's earnings and other companies' earnings. If you want to see how my buy and sell alerts are real time, see my complete watch list with price targets. Guys, we'll talk about the rest of it there at the end. Just check out the pinned comment, see if a membership's right for you, and take advantage of the sale before the price goes away. Second, management is highly incentivized and aligned. Now, I agree this could be a double-edged sword, but man, do you ever want what you need as a shareholder, which of course what we want in the end is have earnings growth so we can enjoy that share price growth. You want management's vision to be aligned with that. You really want their pay to be aligned with that in the end. You got to keep in mind that a lot of the heat that SoFi takes is because they have these crazy management packages that they pay out. Well, they haven't actually paid out Noto's big package yet. Yes, it was signed in 2021. Yes, they allocated for it back then, but he does not get paid until they hit certain markers, and he has until 2026 to hit those markers. So he gets basically no money unless we see $25 per share basically midway through 2026, and he just gets a third of the money he was promised. So the 94 million or so, I believe, was the number that he was promised there. So he gets basically a third of that. And then if he hits $35 per share, he gets that second third. It kind of unlocks that second piece of the share package or the pay package there. And then of course, if he gets to $45, which I know that probably seems unlikely in this short of a time frame there, that then he's going to receive the full value of that pay package there. So that's a lot of money. Almost $100 million is on the line for him in regards to pay that could be coming for him in regards to getting that EPS up to a point where Wall Street will push that share price up over that $25 mark. Obviously, he'd love to get over the $45 mark, but right now I don't see anything that could get us to that $45 mark that quickly. Doesn't mean something new can't come along. Doesn't mean there can't be something else that they're going to unlock in the future there. Don't know, but in regards to everything we know right now, very hard to get there. I can stretch to get to that $25 mark by that time. Again, I've got to do more speculating than I'm comfortable for, but we'll talk about a reason why that's not necessarily unreasonable here in just a second. We'll get to that. He has also bought, and his own personal money, another 8 million shares of SoFi stock, a little bit more than 8 million now, actually, which is worth around what, $50 plus million or so. So clearly, you don't put that much of your own money. I don't care how rich you are. You don't put $50 million towards something that you don't believe in, that you don't think is going to go places over the long run. And if he hits his marks, he's looking at potentially $500 million or more in regards to what he stands to make by hitting that bigger number, that $45 number. So if you don't think that's not top of his mind and he's not licking his chops to try to get that performance out of the stock, so that a way he can unlock that pay package. And you probably will never be rich because you don't understand how rich folks operate in the first place. He's making these bets, he's making these investments because he feels this is the best place for his capital at the time. He could just run the show and put that $50 million some other place that was safer to diversify, something else. Clearly, he feels this is the best place for him to place a good chunk of his money into in order to make a lot of money into the future there. And that's what I mean by his incentives are aligned with ours as shareholders. Number 3, guidance is always sandbagged. This basically just means that he's sandbagging the numbers. He's giving us a very conservative number. And by the way, it seems like they raise every single quarter. So basically he will beat and then raise those projections, but he still leaves something there, kind of wiggle room per se in regards to that. They're always low. So really for the past 2 years, if you want to look at this objectively, and when I look at it, I feel like whatever the heck they guide to, that's basically the bear case. That's basically the worst case scenario happening that particular quarter. Now, I'm not counting a black swan event or something like that. Nobody plans, they may plan for that, but nobody's going to guide to a black swan type event. So outside of something like that, that right there to me is kind of the bear point. Kind of the bearish point to be at is just whatever the heck they guide, because he has routinely sandbag guidance over and over and over and over again, basically quarter in and quarter out. Now you're right, that could change at any point in time, but it hasn't for over the past couple of years here. So I have no reason to believe that's going to change in the future here. At least there hasn't been a track record to it yet. Now again, you're right, could change, but I need to plan for what is most likely to happen. And that is most likely to happen there is he's sandbagging on the guidance once again. And we're going to see continual beats and raises over the next few quarters here, which of course means whenever I project out, I really like where the bear case lies in regards to SoFi stock here in a couple of years when we get to 2026. And that's especially aided by the fact that I have a really low average, because you could get it back in the 4s and the 5s a while ago there. So my average is still well below where we're at right now. And remember, in the end, share count is what matters. So I'm getting a gift right here to continue. Yeah, I'm averaging up, but share count is what matters in the end. And of course, the lower that stock price goes here in the short term, the much, less averaging up that I'm actually doing. And number 4, tech platform growth. Now remember, we have talked about it before. We need the tech platform to grow like gangbusters, essentially, because that is what's going to determine our multiple in the end, and what is going to pull us more towards a fintech multiple than a banking multiple right there. That's kind of the fight right now. And we need to see the continued growth with the fintech platform, with the technology platform that they have. And when you look at the numbers from last earnings call, revenue from financial services and the tech platform, which puts it kind of out of that banking realm, was up 54%, and it made up 42% of SoFi's consolidated adjusted net revenues. So you see how big of a segment of the business it's making up there, which is going to help us with that fintech multiple in the future. Now, the folks out there, the bulls who are projecting it's going to get a fintech multiple, I don't think we're going to get that there because of the bank charter, because of some other things that they're doing. And I just think banking is always going to be a large chunk of the business there in regards to that. So I don't think we're going to get that. But to put it in a traditional bank category just doesn't make a whole heck of a lot of sense either, given the breakup in the business. And more importantly, when you start looking at more traditional banks, traditional style lending, a lot of other things like that, SoFi does not engage in that. And more importantly, the overhead involved, because traditional banks have traditional branches, right? Traditional overhead. All those other things that SoFi does not have, that is going to allow them to increase those margins in the future that a normal bank just can't do. So if they continue to put up those types of numbers in regards to, basically the technology side specifically there, obviously financial services and some of the other non-traditional banking things, we are going to be primed for at least getting some sort of a hybrid multiple there. Definitely not getting a pure bank multiple like some folks want to pigeonhole in and give it to. So am I buying more, and at what price? Those of you guys that are in the portfolio challenge, you got to wait till Friday there. It's coming up shortly here. Don't worry about it. But in regards to my main portfolios, everything that I'm looking at, am I looking to buy more SoFi shares or not? And the answer to that question is yes, I am looking to buy more. I have my price target to buy at $6.69. And so yes, if it continues to stay down below $6.69, I'm going to continue to add shares to the stock, because to me, share count is what matters long term. And for right now, they have given me nothing outside of the share price being down and beaten up to think that the stock is not going anywhere. There's been nothing in earnings, nothing in any of the other data points that are out there that tell me this stock is just a dead stock and not going anywhere. If you changed nothing today, but the share price was at $12, would your feelings about the stock change? That's kind of the test that I give myself to know, am I dictating my decisions based upon share price, or am I making my decisions based upon the fundamentals of the company? I can tell you right now, if the stock price was at $12, I would not be looking to buy, but there would be a lot of folks out there who would be looking to buy because, wow, it's ran up to 12 and it's on its way to 15 and everybody's saying it could hit 18. That's not the right time to buy at that stage. That's how you get stuck buying high, and then selling low. I don't want to do that. The fundamentals in that particular scenario did not change. The only thing that changed was share price, which for me, when the fundamentals, in my opinion, are great and the share price is down, that means buy, buy, buy. And when the share price is way up and the fundamentals haven't changed, that to me is something where I take caution and I kind of pull back from buying at that stage. And that's how I avoid that buy high, sell low type situation that a lot of folks find themselves in. And remember, if you want to learn how to do all that, work directly with me, you take 5 courses free, use our stock analyzer tool for free, get your free coaching, be a part of the best 6, 7, and 8-figure Discord out there, see all my buy and sell alerts at real time, see my watch list complete with price targets. Guys, there's so much involved with the group. Check out the pinned comment, take advantage of the sale that's happening through this weekend here, where one of the biggest discounts ever is right there for the taking. So make sure you take advantage. And click this video here if you want to see exactly what I'm buying in this market, and click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.